Canada's economy once again missed the Bank of Canada forecast on economic growth. Today's video is going to discuss why this bad news is good news for Canadian bond investors. Welcome to the Smart Money, Dumb Money Show. I am your host, as usual, Keith Richards, and I'm President and Chief Portfolio Manager of ValueTrend Wealth Management. And today, we're talking Canadian bonds. GDP growth fell 0.4% per capita in Canada in the most recent Bank of Canada report. This is the 6th consecutive quarterly report of negative GDP growth. Why is that happening? Well, rampant spending, higher taxation on capital gains and carbon taxes, those are some of the factors that crush any economy's economic growth. In my last video on US tariffs, I referenced this exact challenge to the Canadian economy. You'll see the link for that in the notes below. Why is bad news good news for Canadian bond investors? Well, with the bad news comes incentive for the Bank of Canada to lower rates even more than previously anticipated. And if anybody knows anything about the bond market, interest rates going down mean bond prices going up. So today we're going to look at the long bond and see how that plays out. As we can see on the iShares Canadian Long Bond ETF, the long bonds in Canada have been stuck in a very long trading range. This has been happening since the beginning of 2022. Now there's a saying in technical analysis, and it goes, the longer the base, the greater the case. What this means is that there's a lot of pent-up energy in a long base on the chart. If this chart breaks out, we could see a huge potential upside. This is what I'm looking at, and I'm watching this very closely for such a development. I don't own this ETF or long bonds right now, but I've got a sharp eye on this chart waiting to see if something happens. To wrap it up, keep your eye on the Canadian long bond. And for more information, be sure to subscribe to my blog at valuetrend.ca. And as always, your comments are always appreciated on these videos.